I'm going to start out with a couple of slides I added at the last moment. On the Cali OES FEMA website, this fact sheet was put up just a couple of days ago. And I know you can't see, it's kind of fuzzy there. It's talking about the October 2017 California wildfires, debris removal. And so over on page 4, it says frequently asked questions about insurance. And I think you can read this one, but let's go to this question number 16. What portions of my homeowner's policy will the county collect for debris removal? And their answer was, it depends on the policy you have, and there are generally 2 types of debris removal coverages in a homeowner's insurance policy. So I'm going to stop right there. That statement is true, but how they explain them is not correct. Every policy for property insurance, I mean 100% of them, pay for the debris removal from within the coverage first. I've been doing this for 25 years. I've never seen a property policy that did not provide for debris removal, and it always pays it from the coverage first. Many policies, I will say most all homeowners policies, have an additional extra coverage. It gets paid when the first coverages are exhausted. The way it's explained here is very different. So let me read this to you. We'll start at the bottom. It says no specific amount. Another type of debris removal insurance policy does not have a specified amount, but includes the cost of debris removal in the total proceeds provided for the primary structure of the structures and personal property. No, every policy is like that. It says another type, and I'm telling you it's 100%. Toward the end of the presentation, I'm going to show you the language from policies. This is exactly what it says. Let's go back to the one up here that they described. Specific amount, specified amount. One type of debris removal insurance coverage contains a separate, specific debris clause, typically capped at a percentage of the coverage amounts listed in the policy. For example, 5% of the value of the primary structure of the structure's personal property. No, it is not a separate amount that says this is for debris removal, and that's what we pay for debris removal, and that's all we pay for debris removal. There's not a policy anywhere that reads that way. It tells you that it is an additional extension of coverage if the primary coverage is not enough to cover all of it. Every policy is like that. This is not correct. And this is the basis for some of the problems with the way the right of entry permit is written, a lack of understanding of how the insurance actually works. Okay, so my first 2 slides, I told you that the way that FEMA explained coverage for debris removal under insurance policies was not correct. These are the insurance policies, and I'm going to show you what the difference is. Debris removal. We will pay the reasonable expense you incur for removal of debris, covered loss. This expense is included in the limit applying to the damaged property. The following coverage limits also apply. When the amount payable for the property damage plus the debris removal exceeds the limit for the damaged property, an additional 5% of that limit is available for debris removal expense. In other words, that money that they're saying is set aside strictly for debris removal, you don't get to that money until all the rest of it is used up first. So again, if you had, the insurance company gave you an estimate that exceeded $100,000 in the example I gave you, and they paid you that $100,000, probably not going to be any questions. They're going to pay the $5,000 to the county. The county's going to accept the $5,000. I just wish that they would all get settled that easily. I wish that how much it costs to rebuild wasn't debatable. What's the other kind of policy that doesn't have the excess? It reads basically the same way. We will pay reasonable expense for removal of debris of covered property if the peril is insured against. Down here, this expense is included in the limit of liability that applies to the damaged property. Again, the only difference is it doesn't have a clause saying that there's additional excess only after the base amounts get consumed.